Welcome to the BNP. Today we're talking about a stock that's getting a lot of attention these days. And honestly, I think it does deserve the attention that it's getting because it's a company or a sector that has seen a lot of growth in the past 2-3 years. And it's our main stock, Polestar, ticker symbol PSNY. This stock has recently went public through a SPAC, meaning that the shareholder equity wasn't diluted, new shares weren't created, which is something good to consider, especially for a company that has financial for a growing company. If, for example, they do require capital, they will make more shares, which will dilute shareholder equity, and the already owners of the shares will not be happy. And if they see a price increase, they will be more likely to sell. Now that they have more equity in the company and they see growth in the company, meaning that the company itself is growing, they will be like, yes, we want to stay in it. We want to see the growth because we own more of this company essentially. But if the price point is right, I believe they will sell. Any investor, when he or she makes money, they will obviously sell. That's not a question. Yesterday the stock was down around 12%, and now it's down around another 3%, which isn't bad, especially in this market. The market, like in this bearish market, everything is falling. Obviously it's bad to see your company drop 14% every like one day and the next day dropping 3%. But if we consider the market sentiment right now, it is expected. Now here, this is a new company in a new sector. We're not gonna dive into the financials as of yet. First of all, we need to review the product, because obviously if we're gonna look at the financials, this is a new growing company. We're gonna see a lot of red and a lot of blood and a lot of not good news if we look at the financials right now. So what I want to do is look at the product itself, because what consumers are going to be looking is buying the product, right? And the main objective of the company is to be selling as much product as they can. So we need to see if it is good product, and if a regular consumer coming in is gonna go choose the industry leader's product or the Polestar product. And obviously the industry leading product in this sector is the Tesla Model 3. If you're not sure what Polestar does, they do make electric vehicle. I've seen them in many auto shows promoting the Polestar's newest car. I've seen a lot of billboards coming in, and finally they've released their car. And that's why this decided to go public through a SPAC. So my first goal here is going to be looking at the Tesla Model 3 and the Polestar 2 2023. So I am on the website Car and Driver, which is a reputable website to just inquire about cars and their specs. Here the website has given a CD rating of Tesla Model 3 of 8.5, while the Polestar 2 has a rating of 8 only. So obviously Tesla's better according to Car and Driver. They have a lot of experience in this domain, so I'm not gonna say this is not the correct decision. They decide, and we're gonna be looking ourselves in what Tesla can do and what Polestar can do. In terms of mileage, which is the most important component in my opinion for a electric vehicle right now, because that's what electric vehicle makers are focusing and have their primary focus on right now. So the Tesla Model 3 estimates a 270 mile range, while the Polestar 2 also estimates a 270 mile range. While the Polestar 2 team says that the Tesla Model 3 estimates a 230 mile range, which is not true. In fact, it does estimate a 272 mile range, not 270 exactly, but 272. And I can agree with that, because I have spoken personally with a driver who drives a Tesla car, and he told me that it is true. The company, the car, the Model 3 base, actually can go up to over 250 miles within one full battery charge. Also, if you compare price point, this is the second most important thing in an electric vehicle after the range, in my personal opinion. The Model 3 is going for 48,440, while the Polestar is a bit more expensive, 49,800. So this it's not much distinctive. If a consumer is really trying to save money, he might, let's say, save $1,000 on the Tesla Model 3. I don't know if that's a deciding factor to like decide to choose Model 3 over Polestar. So we're gonna give it equal. We're gonna say they're equally priced, to be honest. But something to look into that the Polestar 2 doesn't offer is all the tablet features that Tesla Model 3 offers. So Polestar, the car does have a tablet inside, divided in 4 sections, and it's using the Android OS software on it. So it's not their own personal software that they maybe can upgrade or improve over time. Like Tesla has a personal software, which is only dedicated. It's like the Apple software, like the iOS that Apple has on its personal devices, and that's the same thing with Tesla. Tesla has its own device, own software for its own tablet, while Polestar is using some other companies. And obviously, it's gonna be anybody's gonna prefer a upgrading software over just a base software. Now, obviously, Android's gonna try to upgrade it, but not as regularly as Tesla, because Tesla it's their own car and they want themselves to improve the car as much as possible. So in this regard, Tesla is in a way higher and better position. Also, Tesla offers Netflix, Spotify, arcade game, Facebook, so many features that we're not currently sure if the Polestar offers incompletely. And obviously, it's the Android software, so it's gonna be a bit iffy, if you know what I mean. Like, I'm not saying the Android software is a bad software, but it's gonna be a bit laggy or whatnot. While on the other hand, Tesla has seen a pitch perfect record in regards to their software. Also, Tesla vehicles offer the self-driving feature, which can be implemented anytime within your purchase. So if, for example, you buy the car, you're not able to afford self-driving, maybe later on in the line you decide you want self-driving, you can get it, right? The self-driving feature is not currently available with the Polestar cars. I know that it is illegal in some or many countries to be utilizing the self-driving feature, but people do like it, and it's an extra option that is actually really, really relevant in the narrative of Tesla and self-driving vehicle, and even in electric vehicle. It's a really important component of the narrative. So if you cannot offer it and a company can offer it, obviously you're going to choose the one that can offer it, and they're both similarly priced at. So you're not really like paying an extra just for maybe having this feature later on. You have it for the same price, and then you gotta obviously pay extra for the self-driving feature itself, but you can do it whenever you want later down the line. There's no pressure or anything. And obviously we know that the self-driving feature inflates. It means that it gets expensive, more and more expensive over time, which actually helps Tesla vehicles retain their value due to that increase in self-driving price, if your vehicle has that feature. So just comparing both vehicles right now, Polestar vehicle does have a disadvantage compared to Tesla, and that was to be expected. Tesla had been working for a really, really long time, and they were supposed to have they were supposed to be better than their competitors from a long shot. That's why no other company can compare to Tesla vehicles in the electric vehicle domain, because they worked so hard, so long, developed so stringently every single feature, especially the electrical part of the vehicle, that even though, let's say, Maserati, Lamborghini, these guys are offering electric vehicles, they're not in the same spectrum as the Tesla vehicles, because Tesla vehicles has that tablet and has that futuristic look with the self-driving feature that is the best self-driving feature and better than any other car right now. So in this regard, PSNY is not going to be catching the savvy or even just the people who are looking for the best cars. But let's be honest, the best cars aren't always the one that sell. Let's look at Chevy. They don't have the best cars. I'm not hating on Chevys, but I'm saying they don't have the best cars, but they still get sale. So now let's get into the financials. Obviously, the financials are going to be really, really bad, and this is from CNBC. As you can see, okay, so this is their PE. They're 28x, but that's not normal because they don't have earnings. I'm pretty sure it's negative earnings. So this is maybe industry in the financial sector. As you can see, their cash, they have, I assume, $303 million. Now I don't know where it says. Okay, so this is in thousands. Oh, so they have 303,000 in cash, short-term investments. Their expenses are at $1 million. Wow. This is the first time I'm like diving into the stock because I'm really not familiar with the situation. So their total so shareholder hold a $800 million liability. Wow. And these are the stocks number, I assume. 800 million stocks. No, there's gotta be 800,000. So they have no long-term debt. They have some deferred income, but the total liability is at 132 million, while the total asset is at 800 million. But that's considering their stocks and their other investment. They also have property. Oh, they have zero property. So I'm assuming they have no factories or gigafactories like Tesla. These are the large institution holding the stock itself. As you can see, Morgan Stanley. This is the only familiar name. I'm not familiar with all the hedge funds and all these big investors. So there's the Nasdaq ETF, Fidelity ETF that owns some share, like 43,000. That's not even, that might be relevant, but yeah. So actually looking at the financials, it's a trap. I'm gonna say the company is not performing well at all. It's yielding 6.84% year to date, which is irrelevant at this moment, because if you're investing in this stock, you're investing it for the long term. Okay, this is the P. So you're investing for the long term for at least 5 years, as people were investing in Tesla. Because if you know correctly, if you follow the Tesla story, they were flat for 45 years and then boom, exploded like crazy. Some people that came in late took advantage more than the people who were there previously, because they probably sold out, or that's up to them. So their PE is negative $16. So each share is losing $16. Each share is losing $16, and the share value is $10. Their earnings EBITDA is 10.01 million, which is earnings after tax, before tax, I assume. Yeah, financials look normal for a growing company, for a new company. That's obviously normal. I'm not gonna say it's bad or good. I need to do a deeper dive. If you guys want me to do a deeper dive into financials and see if the company is gonna be staying stable, obviously it's gonna stay stable. It's gonna stay relevant because it's an electric car company. Governments are gonna help it. They're gonna get a lot of help. Like NIO got a lot of help from China, because it's a really developing sector. So money shouldn't be an issue. Financials shouldn't be an issue. It's just how they perform and how they execute against Tesla and how Tesla innovates, because Tesla's innovation is gonna hinder Polestar. So thanks for watching this video. This was my analysis on PSNY. I hope you like it. I was a bit ill-informed in this video, to be honest, about the financials, but the company itself, I tried to do like a lot of research on the product and everything. So thanks for watching. If you need a better or a deeper dive into it, don't worry about it, just tell me and we're gonna get into it.